Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within financial filings. Today we're diving into Peraso Inc, and let's just say there's a bit of a warrant juggling act going on that might make your head spin, but don't worry. We'll break it all down nice and simple. First up, the big news is that Peraso is entering into a deal to get cash now by offering a discount on their existing warrants. It's like pre-ordering something at a lower price to get it sooner. So what's happening is Peraso has these things called Series C warrants. These are basically options for certain people to buy Peraso stock at a set price. The expiration date for some of these is coming up in December 2025. Now, to get some money in the door quickly, Peraso is saying, hey, warrant holders, if you exercise your existing warrants now, instead of waiting, you can do it at a lower price of $1.18 per share. That's a nice little discount for them. But here's the kicker for this deal to happen. Peraso is also giving out new warrants, the Series E warrants, as a sort of bonus for agreeing to this early discounted exercise. It's like a thank you gift for playing ball. They expect to get about $1.1 million in cash from this deal before they pay any fees. That money is going into their working capital and general company stuff. To make all this happen, they hired a company called Ladenburg Thalmann to help them out, and they're paying them a pretty good chunk of change, 9% of the money that comes in, if you can believe it, plus expenses up to $45,000. And as if that wasn't enough, the placement agent is also going to get their own set of warrants as a bonus for their services. These are called placement agent warrants. Now, for investors who are already holding these original warrants or who get the new ones, Peraso has already registered the shares they can sell through existing registration statements. This means those shares can be resold more easily. But for the brand new warrants, the company has to file another registration statement to allow those shares to be resold. And they need to get that done within 30 days of September 11th and hopefully approved by the SEC within 60 days. There's also a quiet period for Peraso where they can't issue more stock or file other registration statements for 20 days after September 11th. This is to avoid confusing the market or diluting the value of these current deals. Let's talk about these new Series E warrants in a bit more detail. They can be exercised starting 6 months after they are issued, and they'll be good for about 5.5 years. The exercise price for these new ones is set at 125 cents per share. There's a limit on how much stock one person can own after exercising these warrants. They can't own more than 4.99%, or if they choose 9.99% of the company's stock, and they might need to give Peraso advance notice if they want to increase that limit. And if the shares aren't registered for resale when someone wants to exercise these new warrants, they can do something called a cashless exercise. This means instead of paying cash, they can just get the shares directly by giving up some of the warrants. It's a way to get the benefit without the immediate cash outlay. Just a heads up, these new warrants don't give you the usual shareholder rights like voting until you actually exercise them and become a stockholder. And if Peraso is involved in something called a fundamental transaction, which usually means being bought or merging with another company, the holders of these new warrants will get shares in the new company or whatever deal is struck. Or as an alternative, they can opt to get paid the value of their remaining unexercised warrants in cash. This section basically confirms that the new warrants, the placement agent warrants, and the shares they represent haven't been registered with the SEC. They're being sold under an exemption for private placements, which means they're not being offered to the general public, just to specific investors. This just re-emphasizes that the deals we talked about in item 1.01 actually changed the rights that security holders have in the company. On September 11th, Peraso also put out a press release to announce all these exciting warrant transactions. Form of Series E common stock purchase warrant EQSO. What does all this warrant shuffling mean for Peraso? Well, in a short term, they get to bring in some much needed cash by offering a discount. This is a smart move to stabilize their finances and fund their operations. However, giving away new warrants as incentives can dilute the value for existing shareholders. It's a balancing act. The company is essentially paying for capital with future stock. On the positive side, this shows a proactive approach to financial management. They're not just sitting back, they're actively trying to improve their cash position. Now, for my take on this, Peraso is clearly in a position where they need cash, and they're using financial instruments like warrants to gain that cash more quickly. This isn't uncommon for companies in growth phases or those facing financial pressures. The key will be how they utilize the $1.1 million they're expected to raise if it goes into productive growth areas like research and development or expanding their market reach. Then this could be a very positive step. However, there are risks. The reliance on warrant exercises and the payment of fees to placement agents suggests they may not have readily available cash reserves or traditional financing options easily accessible. The discounts offered and the warrants issued to placement agents also represent a future dilution of ownership for current shareholders. It's a trade-off between immediate liquidity and long-term ownership value. The mention of using proceeds for working capital and general corporate purposes is pretty standard. It means they'll use it to keep the lights on, pay bills, and fund their day-to-day operations. This is good and necessary, but it doesn't paint a picture of a massive expansion or a specific groundbreaking project. The placement agent warrants for an exercise price 125% of the discounted price is a bit high. This means that for these warrants to be profitable, the company's stock would have to go up quite a bit. This could be seen as a slight misalignment or a sign that the placement agent is taking on more risk. In conclusion, Peraso Inc. is making a move to secure immediate funding through a warrant exchange program. This strategy provides liquidity but comes with the cost of future dilution and fees. Investors should watch how management uses these funds and whether they can grow the company to a point where the dilution doesn't significantly harm shareholder value. It's a calculated risk they're taking. Alright, that's our breakdown of Peraso's latest filing. What's your take on these warrant deals and what they mean for Peraso's future? Let me know in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives into corporate finance. And don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next one.